Okay, a bit of a change today. We'll get in what dealing rooms are recommending in moments from now. But the last few days, what we are hearing is that the last one quarter has been a bit circumspect with regards to consumption. What does that mean for the last one quarter, and what do the trends look like considering the monsoon has been okay? Of course, the rupee does impact these companies. So lots to talk about. Godrej, CMD of Godrej Consumer Products, joins us right now on the show. Good having you, Mr. Godrej. Always good having you. Thanks so much for joining in. Just wondering, what's your own sense about how the last quarter has been, but more importantly, the commentary that is increasingly saying about how volume growth for the consumption companies at large in India will slow, has already slowed and will continue to slow over the next few quarters. Is that something that you are sensing as well?
No. Well, I can't talk about other companies, but our growth has been good. We continue to grow well. We are increasing our market shares in most of the categories we operate in, and we expect to continue to grow well. We expect a good monsoon this year. It started off very well. That always helps consumption, especially in the rural areas. In our case, one of our bigger categories is household insecticides, and when the monsoon is good, the demand for household insecticides usually increases. And over the last 2 quarters, our market share in all our major categories, that's household insecticides, soaps, and hair color, have also grown. So we see good growth in Godrej Consumer Products, and we expect to continue to see good growth in the company.
Mr. Godrej, good morning. Tanveer here. Have you also come across these concerns, at an industry level, within industry bodies and among investor communities? And where do you think is the source of this concern, coming up from?
No, I think if you look at the growth figures of the last published quarter, most of the companies grew reasonably well. Now we'll only find out after we see the results of the April-June quarter, which will come in about a month's time. But I see no reason why growth should not be good. People's incomes are rising. People have to consume fast-moving consumer goods. I don't see much of a slowdown. I have heard about analysts commentating on it, but I don't see why. What may happen is when the inflation was very high, the value growth figures were ahead of the volume growth figures because there were considerable price increases. Now, that price increase may slow down a little, but with the recent depreciation of the rupee, I feel commodity prices may again go up and price increases might come into play.
In fact, you preempted my next question, because that is one concern that is also emanating for a lot of sectors in general, but FMCG as well, the rupee depreciation and its impact thereof. One, do you see that impact starting to tell in the current quarter, that is the April to June quarter itself? And if the rupee stays at these 59, 58 levels, Mr. Godrej, would that be a concern for companies at large?
Yes, of course. A weak rupee is very bad for the Indian economy. It will lead to inflation, it will lead to macroeconomic problems. And it's very important that the government and the RBI work together to see that we have a strong currency. Any country with a weak currency is always seen poorly, both by investors and by analysts. And I think it's not good to let our currency depreciate as much as it has. We must have policies that ensure that the rupee does not depreciate.
Right. Just referring to your answer earlier where you were talking about possible price hikes, how much do you think, what's the quantum of price hikes that's in the offering, and what is the outlook on margins thereof?
Well, the price hike would entirely be because of the depreciation of the rupee. In fact, international commodity prices had stabilized, crude oil had stabilized, vegetable oil, which is a major input into soap, had stabilized. However, if the rupee depreciates, then unit price of import goes up in rupee terms, and that might lead to pricing. It's too early to tell how much these price increases would have to be. But until the rupee started depreciating during the month of June, we weren't expecting too many price increases in the July, September or October, December quarter. Now we'll have to review the position. Also, after depreciating to almost 61, the rupee has appreciated back to 59.50. So, unfortunately, the volatility of the rupee has also been much more than in the past.
So, but the rupee has depreciated nearly 10% from the start of the year. If price hikes are taken, will they be in accordance with the kind of fall that we've seen in the currency?
Not necessarily, because not everything goes up according to the depreciation of the currency, because not all prices are dependent on imported goods. So generally it will be in line with inflation to my mind.
But are you saying that at least in the immediate term, because you mentioned that you haven't really thought about price hikes, in the immediate term, the next couple of weeks or the next 1 month, there wouldn't be any price hikes, because that's something that the market believes could happen actually?
No, I don't think there will be price hikes so soon. But remember that in the FMCG sector, there are hundreds of SKUs, and each one is managed on its own. So price increases, price changes are taking place all the time. So it's not a question of doing it once, and across different categories, the impact of cost increases are different. So there are changes in prices taking place all the time. Except that at certain periods the trend is faster, in other periods it's slower.
Okay, let's talk about now specifically your company. I'm just dividing it into two. Let's talk about the domestic ops first. And you've had fairly decent growth, double-digit revenue growth, double-digit earnings growth as well. Is that something that's a reasonable estimate? Because you mentioned that you will continue to grow. So double-digit revenue and PAT growth?
Yes, we have been growing at in our domestic market business at about 20% in the last year, and we continue to see strong growth. And with the economic factors such as good monsoon, as I mentioned, factors which are conducive to higher consumption of household insecticides, etc., we expect good growth going along.
Do you expect that input prices would perhaps support margins at this point in time? What's your outlook on that?
No, I don't think input prices have much to do with margins, because people do take price changes depending upon input costs. So I think the more important thing that affects margins is how much one invests into advertising, promotion, R&D. These have a greater impact on margins than input costs, because input costs typically over a period of time get adjusted in pricing.
So what is your outlook on that front, on those parameters, advertising expenditure as a percentage of sales?
Well, we have been increasing our advertising investments very considerably, because we've had many innovative launches recently, both in our hair color business, in our household insecticide business. We've launched a new variant of our Godrej #1 soap. So several new launches. Our entire Synthol platform was relaunched very recently. So our investments into advertising and promotion have gone up very considerably.
What about the international business, Mr. Godrej? How do you see that shaping up? Because the growth rate, it contributes to almost 40% of your revenues, if I'm not wrong. How do you see that side shaping up over the next, say, maybe 2 or 3 quarters?
We have two platforms of growth in our international business. One is the organic growth. Our organic growth has been quite good. We expect it to continue at about 15 to 20%. And then there is inorganic growth. We've been acquiring businesses each year. And every time you acquire a new business or a new geography, it adds to the growth. So our international growth over the last 3 years has been ahead of our domestic growth. So our domestic growth in the last 3 years has averaged at around 20%, whereas our international growth has been much faster. If you look at the overall company growth, over the last 3 years, we've averaged more than 30% growth. So we have our objectives are what we call 10 by 10, to be 10 times our present size in 10 years' time, which is a compounded annual growth rate of 26%. We have been on track on this over the last 2 to 3 years, and we expect to continue to achieve this objective.
I'm sure you will be keeping your investors happy as you have, Mr. Godrej. Thanks so much for taking the time out and joining us and giving us this bit of perspective. We'll talk to you, of course, post your numbers. That's of course Godrej Consumer Products. Okay, on to more news.